Welcome back. Before we take a look at the day's business news, let's take a look at the stock indices across the GCC. And in our top business story, Etihad Airways' bid to carry Air Serbia's flight code on services to the US was blocked by US Department of Transport last week. That's according to local reports. US carriers, led by the lobbying group Airlines for America, successfully petitioned the US Department of Transport against a proposal for Air Serbia to code share on Etihad flights from Abu Dhabi to New York, Chicago and Washington, D.C. Air Serbia would have connected services to Belgrade. The US carriers argued that the proposal was impractical for the consumer, with the Belgrade to New York via Abu Dhabi route adding more than 8,000 kilometers to the round trip. The move by the US Department of Transport came in the week Etihad announced an agreement to code share to more than 40 US destinations with American airline JetBlue. Two UAE banks, Abu Dhabi Commercial Bank and Mashreq, have posted double-digit growth in net profits for 2013. Abu Dhabi Commercial Bank on Sunday reported a net profit of 3.62 billion dirhams for the full year 2013, up 29% compared with 2012. For the fourth quarter of 2013, the bank's net profits were up 40% at 879 million dirhams. ADCB's operating profit before impairment allowances was up 10% to 4.96 billion dirhams. The bank's net loans and advances increased 7% to 132 billion dirhams, while customer deposits increased 6% to 115 billion dirhams. Meanwhile, Dubai-based Mashreq reported 1.8 billion dirhams net profit in 2013, up 38% compared to 1.3 billion dirhams in 2012, largely driven by significant growth in net interest income and net fee and commission income. Mashreq's total operating income for the period grew to 4.8 billion dirhams, an increase of 18.4% compared to a year earlier. The bank's total assets increased by 17.4% to reach 89.7 billion dirhams in 2013, and loans and advances grew by 21.8% to reach 50.4 billion dirhams. Customer deposits increased by 23.5% during 2013. The bank's loan-to-deposit ratio remained stable at 86% at the end of 2013, as compared to 87% in December 2012. Financial markets sold off aggressively in trading last week, led by extended losses in emerging markets, which are posting the largest losses in more than 5 years. The Turkish lira, Argentinian peso and South African rand all dropped to multi-year lows against the greenback, and data from China showed that manufacturing activity had contracted last month. This, coupled with the effects of the US Fed taper in December, are seeing a large unwinding in emerging markets, with a flight to safety taking effect, amidst a risk-off environment. With the Fed expected to announce a further taper on Wednesday, we earlier spoke to Gaurav Kashyap, the head of futures at Al Pari Middle East, to see what his views were for the week ahead.
Well, markets have kick-started this week on the back foot, an extension to the sell-offs experienced in last week's trading session as a result of several high-risk events which are due up in the week ahead. Of course, the main event, what we'll be focusing on, will be the FOMC's meeting announcement, which will take place on Wednesday. The announcement will come at around 11 p.m. Dubai time on Wednesday night. Once again, markets are widely expecting the Fed to continue their taper. We saw them taper $10 billion in December. We can expect them to make an announcement that they will be continuing another $10 billion worth of a taper to bring down their asset purchases to a revised $65 billion. Now, judging by the market's reactions, we're seeing a very dramatic sell-offs in the markets. I think traders are waiting to see and get confirmation of the announcement come Wednesday. But overall, what we expect to see is probably a little bit of a different reaction to what we saw in December. Remember, once the announcement came, markets, the risk appetite took markets a lot higher. We saw equities moving higher, the dollar weakened on the news. But overall, we expect to see the reverse reaction with this announcement. Once again, we will be focusing on the data. Thursday, we see the US GDP reading expected to come in at a robust 3.7%. So overall, we expect the weakness to continue. Stock should be a little bit weighed down in the lead up to that announcement before we could see a bit of a recovery in trading next week. On the stock earnings side, we have tech giants Google, Facebook and Apple to announce their earnings. They could be slightly weaker, as we've seen weaker earnings through Q4 in last week's trading session. So overall, we expect the US dollar to remain well bought in the week ahead, with US treasuries also remaining well bought. Gold looks like it's a good run towards 1300, with resistance coming at about 1315. But overall, markets will remain very sensitive to the lead up to the FOMC meeting on Wednesday.